historic sell-off for stocks. The Dow tanking just over 10% this month. Its worst June since the Great Depression. So is it time for you to panic, or time to turn everyone else's panic into profit? Hi everyone, I'm Brenda Butner and this is Bulls and Bears. Let's find out what's next for your stocks in the trading view. Here are our Bulls and Bears this week. We've got Gary B. Smith, Tobin Smith, Pat Dorsey, along with Matt McCall and Peter Schiff. Welcome to everybody. Okay, Gary B., is that bull or bear in your name?
The B stands for bull, Brenda. Just like it was at the March lows, we took off from there. I think we're about to take off yet again. Here's my rationale. One, I think oil has gone parabolic. If that's not a bubble ready to crash, I don't know what is. It looks like NASDAQ about March 2000 to me. Two, the bones of the economy are good. Everyone thought we'd be in a recession by now, and yet what has GDP done? It shows we're not in a recession. Now, maybe that'll occur later, but so far, all the doom and gloomers have been wrong on that regard. Unemployment is low. Companies are still making money. My gosh, Citigroup is now priced almost 70% below its high. I mean, I just refuse to believe that a stock like that can drop much lower, well, and a year from now, it's not going to be much higher. I would be a buyer right now.
All right. Speaking of doom and gloomers, Peter.
Well, I don't think anybody should panic. I think they should sell. I think that's the rational thing to do. This is a bear market. We've been in a bear market since 2000. And, you know, the market's going a lot lower, not only in nominal terms, but in real terms. You know, Gary might think there's no recession because he believes what the government says, but the government says the economy grew by 1%. But to do that, they claimed inflation annualized is 2.7%. If inflation is 4%, we're in a recession. If it's closer to 10%, which I believe, we're already in a severe recession, and it's going to get a lot worse. And I don't think crude's a bubble at all. I mean, Gary, you ought to take a look at the chart. It doesn't look like a bubble at all. It's a good chart. It just broke out again. It's probably going up to 150, and, you know, trying to catch a falling knife in the financials, they have a long way to go down. I wouldn't touch them.
All right, well, Matt, you know, bears come in different sizes and shapes. I mean, I'm not going to scoff at 10% down 1 month, but there have been many bear markets that we've seen much worse. In 1987, it was 23% down, and that bear market lasted 3 months.
Yes.
This might not be that long.
No, and you look back in history, going back to 1900, we've actually had 26 bear markets in that time frame. And you look back at the average, it's been about a 30% decline. So we take the Dow, we're down about 20% from the top now. That means we're pretty darn close to the bottom, even if we go into what we call a bear market. So selling here, what Peter's suggesting, is the exact opposite we should be doing. That's a panic, that's selling. When you make money, you buy when things are at good valuations. We're sitting at that now. I can't agree more with Gary. And plus, the amount that's in money markets right now, sitting on the sidelines, is at historical highs. Once this market starts taking off, it's going to explode.
Valuations are not good.
Okay, hold on. I just want to get Toby in here, because actually you think being in money markets or being in cash is not such a bad thing.
Well, it's not a bad idea. Remember, what we haven't talked about is inflation, and not only just inflation in the United States, but I'm much more concerned about inflation in China and Asia and other parts, because look, you have the Chinese stock market down 50%. You have the European stock market that's down more than us here, guys. We've been sort of contained on our inflation because of our housing debacle, where I'm seeing two things. Is number one, as this, 50% of the population of the world now has inflation more than 10%. That means stocks are going to be worth less because inflation is taking a power out. The second issue is that we've got the second wave of the recession. And Gary, I'm sorry that 1% GDP. Usually there's a 1% plus or minus anyway in GDP numbers. And more importantly, we've had a bear market in almost every sector in the market. What we're doing is having the rest of the stuff catch up. I think we're farther to go. There's going to be a bounce. You know, like Gary, the trader he is, there's going to be a dead cat bounce. But on that dead cat bounce, I'll tell you the one thing I'd be selling, and that's if you were buying financials trying to look for a turnaround, boy, you got to sell them into this bounce.
Well, Pat, what do you think? I mean, you've heard both arguments. I mean, is there good reason for people to be selling right now, other than the fact that they're just plain scared?
I mean, if your time horizon is anything beyond, say, 3 years, and I think for most viewers who have 401ks or they're saving for kids' college or for their retirement, you know, selling now simply does not make a lot of sense. lower prices today mean higher returns over the long run. I mean, that's just a simple way the math works. And, we are likely in a recession. I'm certainly more in Toby's camp on that front. But, stocks tend to anticipate these things. When did the market start rolling over? Last summer, when all the economic data looked just dandy. So the stocks are going to come back when the economic data still looks pretty ugly. So I think right now, buying big multinationals like a GE or United Technologies, you're still getting exposure to emerging markets. These are companies with pricing power, which is good in an inflationary environment. I think it makes a lot of sense.
Now, GE's a hedge fund masquerading as a company. I would stay away from GE.
Thank you, Peter.
Well, what would you like, though, Peter?
Look at gold. You want to see a good chart? Look at commodities. Look at foreign currencies. We are in a secular bear market. It's been going on for 8 years. It's going to go on for another 5 to 10 years. If you want to wait that out in the U.S. stock market while inflation eats away the value of your principal, you're not going to live long enough to get
Gary
even.
B., what do you say to that? 5 to 10 years.
I did a little research into gold, and I will give Peter the fact that gold has had a nice run lately. Gold also goes through incredibly terrible times. In 1981, an ounce of gold was about $500. In 24 years later, it was still about $500. So gold can go through a stretch where it dramatically underperforms the market. In fact, inflation adjusted, gold is still dramatically, Peter always likes to talk about inflation, dramatically down from its peak.
But so, we're not in that
hold
stretch.
Hold on 1 second. And as for your other point about us being in a bear market since 2000, my gosh, inflation adjusted or not, the New York Stock Exchange, if you want to use that as a base, is dramatically up 40%.
The NASDAQ is down 50%, and the Dow is lower than it was 8 years ago. The Dow was at 11,750.
I'm just looking at a broad range of the market, whether you look at the S&P
and
or you look at the New York Stock Exchange. So I don't see how we're still in a bear market.
Yeah, inflation's knocked 40% of the value.
All right.
But
Peter, when you pick your starting point at 40 times earnings, of course it's going to be better.
That's exactly right.
Well, that's when the bear market started. But gold was $35 an ounce in 1970. Why don't you take a look at that time frame?
Okay.
This is one of the times
I'm going to right now.
Okay. Okay, Matt.
Well, my head's spinning right now, to be honest with you. But really, Gary made a great point. Look at the long term with gold. You really haven't gone anywhere. You look at the long term of market, you're going to continue to move higher. Over the last 45 years, we've only had the worst losing streak we've had in Dow has been 3 years. Yeah, so if you're going to try to time this market, Peter, to be honest with you, investors out there trying to time this market are not going to make money.
In 1929, the Dow was worth 20 ounces of gold. Now it's only worth 13. It's gone down over the last 100 years.
All right. Thank you, Peter. I just got to get to Toby or he'll kill me next week. But, in many bear markets, you get rallies, sharp ones, 5 to 10%. If we get one of those, are you selling?
Well, I think that you're going to get a bounce because we're so way oversold. The sentiment is horrible. Probably in the next 5 to 6 trading days, you're going to see this, oh my gosh, world's coming to an end. And then as soon as those people jump in a short, this market's going to be up 10% in a week. But the bigger issue is we're underestimating how damaged our financials are. And I go back to Citibank at $9 to $10 in 1990. Our target was $16 for Citibank. Our target now is $12 because the bad news is not priced in. And I don't want to see people out there, chasing.
Okay. All right. Great debate, guys. I know we could talk a lot more about this, and we will next week. That does it for the trading this week. But how do you turn panic into profit? So grab that pen and paper. You'll need it. It's time for the best stocks to own for the second half of 2008 right now in the stock exchange. Gary B., you're up first. What do you got for us?
Goldman Sachs, Brenda, GS. It's kind of financials for scaredy cats, if you will, because it's such a great company and it's well run. And as a bonus, I like the chart, which we'll take a look at here. You can see it was trending down after coming up from March and then down in May like a lot. But you can see it broke out there in about early June or so. It's just been moving sideways. I think it's right at the bottom of that circle there, about 174, 175. I think the next stop is upwards at 200.
Matt, do you agree? Quickly, bull or bear on this?
You know what? I think it may pull back a little bit more, and I'm not surprised. I think he's running out of financials, though. Is there any left for me to pick out?
I am.
All right, Peter, what do you say to that?
Well, look, it's definitely the strongest in the group, and as a result, you've got a lot of hedge funds that are buying Goldman and shorting Merrill or shorting Lehman, but eventually they're going to unwind those trades. They're going to take this stock out and shoot it just like all the others. It's going to drop 100 points, short it.
All right, Pat, what is your stock, please?
A pretty simple story. Lowe's trades at 11 times earnings. It's a wonderful business. It's part of the duopoly with Home Depot. Right now, the stock is priced as if the current trough conditions in the housing market persist for the next 4 to 5 years. So if you think this current state persists for 5 years, don't buy it. If you think 5 years from now things might be a little bit better, you'll do very well.
Toby, what do you say?
Well, listen, it's been hammered, and it's the best out there. My point would be that, A, we know the economy is getting softer. B, we know that the spending in their space is contracting. If it's a good price now, Patrick, I think it'll be a great price, about 15-20%.
Matt, Bull or Bear?
I'm going to be a bear in this one because I think that it was spending the second half of this year is going to come down to buying new paint or new shoes. I know in my household it's going to be new shoes, so yeah, I'm going to stay away
Well,
from
that's
those
just
here.
your wife. But that's a statement of her. Okay, Toby, what is your stock?
Well, I like, listen, all the shale oil gas companies, but Ultra Petroleum has a unique story here because in their shale, the part of the road where they drill down and go sideways, they're going to have a ruling here in the next couple of weeks, which is going to allow them to double the amount of oil and gas wells. When they double that, they literally double their reserves, double their income power. This is $100 now. Buy it a pullback. It could be a $200 stock in the next couple of years.
Pat, what do you think of that?
This is the lowest cost gas producer in North America. It's an amazing business, but I would want to buy it cheaper, maybe $80, not at 100.
I'll take that.
And Peter, would you go out and shoot this one too?
No, I like this stock. I have clients, believe it or not, that own this stock at under $5 a share. It's been a huge winner. I agree. I would still buy it. If it pulls back in the low 80s, I would buy a lot more of it.
You still agree now that he's a... All right.
Well, you got an energy stock.
Nice things about it.
Okay. Matt, your stock, please.
I'm going to Peru, actually. Credit Corp, which is a major Peruvian bank. What I like about this is it's held up very well in a downturn we have in the U.S. financials. Also, Fitch, back in April, upgraded Peruvian debt to investment grade, so it allows money to come in from outside sources. So I think it's a great place to look for financials if you want to be active in that sector.
Well, Gary B., what do you think of that financial?
I didn't think to look at
There's
Peru
another
for
one.
my financial picks, but I love the action on this. It's trending upwards nicely. It's a great pick.
Gary B.'s going to be going to all the emerging markets now looking for financials.
The new banks.
Pat, Bull or Bear on this?
Huge bear. Management treats it like a private piggy bank, paying themselves 11% of operating income, and it trades for 5 times book, which is loony for a bank.
Okay, Peter, your stock, please, finally.
Well, the second half is going to be a disaster for the stock market. You want to own the gold stocks. Those are going to be the best performers. The South Africans are the cheapest. I like AU. They just completed a rights offering. They're going to buy back some of their hedges. It's going to be great for the stock. It could double by the end of the year.
Gary B., news alert. Peter likes gold.
Yeah, exactly. Well, I'll tell you what, gold per ounce is certainly going to drop $100 per ounce way before Goldman Sachs drops $100.
I'll take that bet.
So I don't like this at all.
Toby, quickly, Bull or Bear?
You know, Peter's never had a bad stock pick, but this stock started at 50, it went to 45, now it's at 40. I think it's a great buy at 30.
I started buying it at 12.
Thanks so much. Okay, here we go. To Capitol Hill. Predictions. Gary B's up first again. What do you got?
Well, I tell you what, Brenda, as one result of these high oil prices, not only is mass transit spiking, but people are walking more downtown, all over the place. And a big beneficiary of that is Timberland, TBL, make all those great walking shoes and stuff. I happen to love the chart. I think this is a stock going much higher, up 30% or so.
Tobin, you got your Timberlands on?
You know, the only problem with that thesis is nobody's buying these shoes. They're walking a lot, but they're keeping their own shoes. Retail is soft. This is getting softer. Don't buy it. Sorry.
All right, and your prediction?
Well, I think we're going to have one of these massive short squeeze bounces here in the next 5 to 7 days. And what's going to go up? All the stuff that's gone down the most, right? So let these financials come up, and then you can buy the SKF, which is essentially shorting them. It's a way to get 2 times their fall, because they're going to fall right back on their face when they come out, as they're going to do in the next 3-4 weeks, and admit to 50% more write-offs than they said we had even last week.
Okay, Gary B., what do you think of his prediction?
So he's waiting for it to go up, what, 30% and then drop 30%? So we'll be right back. Well, I guess
it'll go up 10% and it's going to drop 25%. That's what I'm saying.
Okay.
I think you're wrong about that.
All right. Well, you know, sleep
All right. Matt, your prediction, please.
I'm actually drinking Gary's Kool-Aid. I'm going with the financials. He's finally convinced me to go with it. You know,
I think you're smoking the Peruvian, pal. That's what I think you're doing.
I like J.P. Morgan here. I think when Goldman Sachs came out this week and put Citigroup on their conviction sell list, they called the bottom of the financials. So I like J.P. Morgan here, about 25% at the end of the year.
Pat, do you like it?
I like it a lot. Diamond's really maneuvered this company well, kept a very strong balance sheet, and they are definitely going to be a survivor. They'll have the capital to lend when we get through this, while others won't.
But, Peter, yes or no, do you like it?
Me? I don't like any financial, so no.
Okay. All right. And, Pat, your prediction?
Legacy Reserves LP. This is an MLP, Master Limited Partnership, trades like a stock, that owns sort of slow, mature oil fields down in Texas. Very good operators. Officers own a lot of the shares. Yields about 8%. And we think it's pretty undervalued right here because people simply aren't pricing their hedges properly. So you're getting about an 8% yield, and we think probably 40 to 50% upside
you like
on the stock.
Well, listen, I love oil, I love gas. I mean, I think that we are pricing these hedges reasonably. I don't see it moving 50%, 10 or 20, but I don't think it's a home run that
Okay,
Patrick
and
thinks.
Peter, your prediction. What do you like?
Well, this week, Bernanke said the economy was going to improve and inflation was going to moderate. He's wrong on both counts. The economy is going to get a lot worse. Inflation is going to get worse. And you got to get out of the dollar. It's going to fall at least another 10%.
Asian currency.
The Merck Asian Currency Fund. The Asian currencies are the best value. Some of these currencies now are pegged to the dollar. They're going to drop their peg.
Peter, this is the part of the show where we give a prediction, okay?
Okay.
It's an Armageddon play. If you think, you can buy Fallout shelter.